Hi everybody, this is Hustle Hub. I'm Giacomo, and today I'm again with Eric Grovenhoff. He is a Seeking Alpha contributor, and he has prepared a research on A10, and he's going to show us right now the research he has done. He's done a pretty good research, and yeah, Eric, introduce yourself for those who don't know you yet or haven't seen the Crocs video, and then let's show us what you have researched and what you have done.
Sure. Hello, everyone again. Thanks for letting me on, Giacomo. My name is Eric Grovenhoff. I write for Seeking Alpha. The last Crocs video we did, it drove a lot of traffic to my Seeking Alpha page, so I much appreciate it. And then what we're doing today is A10 Networks, which is very different than Crocs. So A10 Networks, it's unlike Crocs, right? So this is a cybersecurity company, and they do DDoS, distributed denial of service, as well as other things. Now, this type of company requires deep understanding of what they do versus something like Crocs. So Crocs is a sandal, it's a shoe, right? So really, the market is already there. So really that whole business model is based on marketing. Can you market it to make people want it, right? Because there's already other shoes out there. So really, they're not really creating a new market because people already wear shoes, right? So
Yeah, sir.
So this is actually a new market and a growing market. So A10 Networks, I found it from a author that I really follow a lot, Kabayman. He is one of my favorite authors on Seeking Alpha. So I found this, and I was lucky enough to have the CEO return an email and have a Zoom meeting with me, and he explained in depth about what his business does. So today I'm going to talk about the company. I'm going to talk about the CEO himself since he took over, what they do, their financials, how they're doing per region, their valuation versus their competitors and other companies like it. I'll throw a few charts in there, and then I'll throw the transcripts of the interview up onto the screen. This has been submitted to Seeking Alpha, so even though it's not by next week, or by the time the video is up, you should see my article here. So I found this company, and this is what their trailing 12 months, I'll put you over here, I'll put us over there. Their trailing 12 months looks like. Now, you will notice, if I do a percentage of revenue, my favorite statistic, right? This quarter right here, March 2020 is when the new CEO, Drew Patrivetti, took over. Excuse me, this quarter right here, right? And this quarter is when profitability started, because it was a good company, and they were doing good things, but they weren't profitable. So the shareholders got active, and they brought in a new CEO. And there's another company called Digital Turbine. The ticker is APPS, and that was also a turnaround story, as was Celsius Holdings. Celsius Holdings I actually wrote about. So when I see a turnaround story, I get not excited, but it has my attention, right? So this is quarterly, trailing 12 months growth, right? And as you can see here, you have 286% operating income growth from the quarter prior, 133% here. And the operating income, much larger than the total revenue growth, right? Which means they're operating efficiently. Here's a percentage of revenue, which is one of my favorite metrics. As you can see, each quarter is getting larger. And this is, it's getting larger from the quarter previous, not only from the quarter from the year earlier, right?
Okay.
So 2, 5, 7, 9, 10, 12, 13, right? So as a percentage of revenue, their operating income is growing significantly, as is their net income. This over here is actually a blip. It's one thing about the spreadsheets, you have to look and you have to understand why. At first, this seems extremely attractive. You have a 38% growth. That was actually a one-time tax advantage. So upon digging deeper, I realized that. Right, here, 817% growth from the quarter prior. So that was just a side note that's why that is so large. So I came across the company, and I saw the robust recent financial strength, right? Now, a company like this, cybersecurity, the numbers have to be beautiful because, I mean, I understand what they do, but I can't work there. It's not like Crocs where it's a shoe, right? This is complicated stuff. So I started to look at their financials. I liked what I saw. And I started to dive in depth to what they do. There's 3 main parts to their business. This is the rough draft of the article. So this has been submitted. So I started off talking about tech stocks, stocks such as DigitalOcean, which has a triple-digit price-to-earnings ratio. Fortinet is near a triple-digit price-to-earnings ratio. CrowdStrike has a 300 price-to-earnings ratio, and that's after a 40% sell-off recently, right? So even after a 40% sell-off, these companies are massively, overvalued or valued at a premium, let's say, right? So Shopify is down 50% and it's still at a price to earnings ratio of 136. So I found A10. I mentioned before Digital Turbine, one of my, which I am long Digital Turbine. This right here, Digital Turbine is actually my biggest holding. I wrote a piece about that. So the company does ADC, Application Delivery Controller, which is basically hardware. And that, if I were to open this link, I'll stop opening the links as we go through the video, but because just take my word for it. But it's growing at 38%. Let's get you out of the way. Right, $227 billion market. And then we have the cybersecurity market. And the cybersecurity market is growing at 12%. That's as of now. And actually, the news came out today. Today is February 25th, 2022. The news came out today that NVIDIA just got hacked, right? So, and if someone watches this video a year later, there's going to be another 20 hacks since then, right? So hacking is going to just keep going. So I talked about the company, talked about the original CEO, Lee Chen, and he was voted out by shareholders not too long ago. And right around that time, as I showed you on the spreadsheet, is when the company really just had its turnaround. So looking forward, what do I think it's going to do looking forward? Well, I can look at what it's done recently, right? So this is an ugly spreadsheet that I compiled together from the transcripts from my conversation and from the investor presentation, right? So I put together some numbers here. This is the company's sales growth in America, right around from the time the current CEO took over. Now we're at well into the double-digit sales growth, right?
Okay.
Japan was mostly the same. EMEA has been massive growth since he took over. Hit 39% there. This is deferred revenue. It's deferred revenue was new. They started doing it in 2020, which is why I have started here. And that has hit 12% in the most recent quarter from the year prior. So service as a percentage of revenue. This is just a breakdown of what they have. But look at this, right? What are they doing lately? 18% recurring revenue growth. So they're transitioning in a way to a software as a service company, excuse me. Gross margins, they have plans to hit 82%. And I have over here a chart of their gross margins. And I also have I'm going to show you these are just charts of their recent statistics, right? So this is EBITDA, right? Here's A10 over here. This is percentage growth. So if this was linear, if this was just in number of millions, these other companies would dwarf it because they're much bigger companies. A10 is much smaller. Yeah. But if you look at the percentage, right? Look at how far away it exceeds everybody else. And these are all in my article. When it's up, you could see it. So this is their price to earnings ratio. This is the last year, right? Fortinet, which is a very well-known company, well into the triple digits, then the recent sell-off, right? And this is A10 down here, well below everybody else. So I have the highest growth of earnings and the lowest valuation. So here's gross margin. And this is growth of gross margin. This is actually this is growth from the period prior. So as you can see, it's increasing, right? And these other companies actually have a higher gross margin, not by much though. They're all in the upper 70s or 80s, but it is growing at a faster rate than the rest of them. They are doing the turnaround, right? Then I have total revenue, which it's holding its own. Fastest growing revenue, the one that's growing the most sales, is Fortinet. But Fortinet is around a $50 billion market cap, and A10 is around $1 billion. So it's much, much smaller, right?
Okay.
Then we have this, right? So then I went on in the article. They've also been winning awards. This specific company, Cybersecurity Magazine, they basically hold contests. Like, I'm sure if you've ever seen the movie The Social Network, you have the hackathon where, you know, he gets all the guys in the dorm and they try to like hack him to get the job. So these tech people, they have something like that. And long story short, they won 2 awards recently for their performance of their cybersecurity system, right? So because I can't work there, I have to look at things like this. I have to look at the type of awards they're getting, right? Because I can't start a cybersecurity company, right? Like, I'm not in that field. So I really have to rely on the props, right? The judgment of people in the field, right?
Yeah.
So in short, I'm long A10 as I finished here. They're competing against companies that are literally 50 times its size. So then I went on into the transcripts of my interview with Mr. Trivedi. And to make a long story short, this is around a half hour. And really what I got out of him was since he took over, the consensus or the rumors or the news, right, was make A10 a buyout type of company to get absorbed by a bigger company. And since he turned it around and he's been doing the financials correctly, now the shareholders are okay with him holding his own, right? And really what he showed me about his company is how it stands differently from the other competitors, and how he's very consumer centric, which if you watch Jeff Bezos, that's all he ever talks about, is being consumer centric instead of competitor centric, meaning he doesn't worry about what his competitors are doing. He just worries about what he is doing for his customers. So they do have some big customers, such as Microsoft and various others. And these companies, in the software as a service model, it's very sticky. It's a subscription. It's like, you know, how we subscribe to Netflix. It's a subscription B2B business model. So with that, I pretty much stated that I, was long the company. Right now it's around $12 a share here, right? And then I did my projection of where I think it could be moving forward. And I see no reason that this can't be a $10 billion company moving forward. And it just really, really makes sense with, you see, once these companies are in the triple digit valuation, once, your valuation's 110 PE, 300 PE, any piece of bad news comes out, right? It just plummets, whether it's a war with Ukraine, whether it's you miss your earnings goal or anything like that. And so it really doesn't offer a margin of safety. So if I see a company growing nicely with good margins in a field that's growing, it deserves my attention.
Yeah, that's right. And it has a lot more margin of growth compared to what you said before, a $300 billion company, right?
Fortinet was 50 billion. 300, okay. Some of them were 300 price to earnings ratio. Like if I were to pull up right now, let's say I pulled up CrowdStrike, which is not in the same business, but let's just say I pulled it up. Right? Look at this PE over here. I mean, it's insane.
Yeah.
Right? And some of these companies are losing money as they're, not necessarily CrowdStrike, but some of them are losing money constantly. But because it's a tech company, I mean, CrowdStrike's not bad, right? Well, their operating income isn't really that great. It's not really growing that much. Right? Oh, I'm sorry. This one is losing money. I knew there's a reason I wasn't looking at it. I probably looked at it once and I was like, I don't want to know anything about it. They're losing money. It's crazy, right? Don't analyze I try to not analyze my common sense way, right? Like I want to invest in something that's profitable. So versus this spreadsheet, which if I were to just go absolute, right? So it was losing money, then the turnaround happened, right? So right now it's still very, very much under the radar. And it's not my biggest position. My biggest position is digital turbine, along with InMode. And he really showed me some insights into his company. Let me see if I can think I've added in. Oh, so this is how cross-selling. So what he talked about is how he acquires customers, and he might acquire a customer, and let's say they sell 30 products. He might give them one product or one service, but they tend to be sticky and they tend to buy more from him. So what he said was that 80% of his sales are from existing customers.
Okay.
So he's selling to people that are already there, right? Other than that, he went into, did I show you the chart yet for where they're growing?
Yeah.
Okay. So, right, he's trying to grow the most in America, is extremely underpenetrated, and he's going for Western Europe as well, Germany, Switzerland. He sees them as massive, massive markets.
Okay. Yeah.
He does have presence in Brazil and Mexico, and really, this is this number is very, very good. This 118% retention rate. If they get this anywhere near 125, that would be a serious company moving forward. And they partnered recently with Dell and Oracle to sort of piggyback on them, so to speak, and working parallel with them, right?
Okay.
So they're not doing all of the selling themselves. They're also using bigger companies to help them sell. Yeah. And as you can see here, Microsoft was 19% of the DDoS is the cybersecurity for anybody. Distributed denial of service. That's what that stands for. And X and what his projection could be going out in 5 years. And also 5G. I noticed on many stock websites last year, the start of 5G, and they were really, really pushing the start of 5G and the IoT, Internet of Things. So basically your refrigerator, your air conditioning unit, and everything being connected to the internet. That's what Internet of Things is. And then the connectivity of those things will be the 5G. That's all vulnerable to cybersecurity. So if someone can get into your thermostat, you're vulnerable. So they really deny the hacking ability for many, many people. And they're very, very focused on this over here of the 5G. So everything you see here that's on my screen. Oh, I forgot about this too. Their retention rate was around negative 10% per year. And then once he came in, it was getting smaller by 10% a year. And their goal retention rate is around 125%. And they are truly is a turnaround. We'll see how it goes going forward. He told me that they add 5 to 600 customers a year. This is their goal for growth, 10 to 12% a year, right? They handled the chip shortage. I asked about the chip shortage. And I asked about which competitor he fears the most. And we both laughed during the interview. He says, I know this sounds so flippant, but I spend more energy thinking about the customers than about which competitor's doing, what the competitor's doing. Their number one competitor is F5. So I started looking at, like, let's say I pull up F5 over here, which F5 was in those charts I showed you before. You probably just didn't notice it because it was in the middle with the pack with everybody else, right? F5, let's look at their growth, right? The revenue is growing faster than their operating income, which isn't necessarily bad, but it's just not my sweet spot. When I see operating income growing faster than revenue. And the reason I think that is because when I started to look at other home run investments, that was the number one thing I saw that they all had in common. They had operating income sometimes doubling their revenue growth. So if I were to look at TTM, trailing 12 months, I need a new computer. So if I were to look at their trailing 12 months, what do I see? I see a lot of red, right? They're really not growing, which isn't bad, right? Like I didn't speak to that CEO, but in terms of the financials, A10 is in a much more, they've completed their turnaround and they are ready to break out. Now, should A10 be valued like the rest of these companies? Should A10 be valued like Fortinet? Let's just go back to A10. So their PE, I believe, was like 10. So just to be valued like the other companies would imply a 3x upside.
Okay.
Right? Their forward price to earnings ratio is 21. Right? So if they were to hit triple digit, not even growth from this valuation, just if they were to be grouped in the others, in the other valuation.
Yeah.
So I see it as a safe investment right now. I see it as something that can outperform the market moving forward. Something that if it goes down, it doesn't really faze me. And if you look at the 1 year, right, it hasn't really sold off too much. You know, we're in a little bit of a bear market right now, especially, you know, Ukraine just happened. So any excuse the market needs to go down, it'll take, right? So it really hasn't sold off too much. It's pretty stable. Oh, and I forgot about this. They declared a dividend.
Okay.
And they doubled their share repurchase. Forgot about those two things.
So thank you, Eric, for being with us today, for sharing your analysis and information you have gathered. So thank you for that. Make sure to follow him on Seeking Alpha, and maybe, I don't know, if you want people to reach out to you on other platforms, I'll make sure to put every link in the description of the video.
Appreciate it.
Okay. So thank you, Eric, for being with us. If you have anything else you want to say, you're free to do so. If not, I really want to thank you again for being with us today.
No, just this is fun. I enjoy doing this, and I'm in the process of starting my own video channel, not necessarily to become a YouTuber, just to explain in video form the articles for people that don't want to read all day, I guess you could say. So.
Okay. So I wish you good luck with that. And this is it for today. I'm Giacomo. This is Salsa Hub. See you next time.
See you guys later.